Okay. All right, guys. How you doing? I hope everyone's doing good. So let's begin. Okay. Last week we looked at a few assets. We looked at AUD, JPY, and then I think the next thing we looked at was Nasdaq, right? And the AUD actually played out a lot more better than I actually anticipated because the trade is a long-term hold, and it literally played out very good. The people that took that trade should have made a decent amount of money. So if I'm not mistaken, we were here when we analyzed the market and we expected the move to happen on, I think Monday or Tuesday. I can't really remember what day it was meant to happen. But then we took the trade and then the trade went as planned, right? And literally went a lot more further than anticipated getting here. And I remember when it got here, I messaged in the group saying you should take profit. I think we're around here at that time. Told everyone to take profit. So if you had, you probably have made about 148 pips before the drop because the pullback was imminent, right? There was no way to escape the pullback. Price got to a point of resistance and price dropped all the way back to support. And from support, price just started kicking back off, right? So rating every single person in that trade. Now, also that same time last week, we looked at NASDAQ, right? Now, NASDAQ is a tricky one. Remember I said this one, if you're not, what's it called? If you're not if you're not professional with the tool and you haven't been using the tool for a long while, do not take the trade because the trade is a super high risk trade. And the main reason it's super high risk is because we used the seasonality only. We don't have a COT report, neither do we have probability on this asset, which means that we're trading with just 33% of the strategy that we currently have. And if you're trading with 33%, it's a super high risk trade. So you have to trade accordingly. And NASDAQ initially started going the way as planned. And then, did about, how many pips was this? About 4,947 pips before the kickdown started. And then when the kickdown started, a lot of people should have got kicked out of the market. I do not anticipate anyone losing money because you should have locked yourself in profit. But if you haven't, you should, take it as a learning curve for now, and then we'll make adjustments as we go along. So those were the two trades we took last week. So off the bat, does anyone have any questions in regarding those two trades? Right? Is there any questions regarding those two trades? If there is,
sorry, I might have missed, but are we re-entering into the NAS?
There is currently right now. We have to reanalyze the NASDAQ because we only have 33% of the strategy. So if we can find an alignment with the seasonality chart, then NASDAQ will have to be let go of. But in the meantime, what we did over the weekend was update the website and have DJI instead also uploaded as a seasonality tool on the website. So we can look into DJI, we can look into S&P 500 and see possibly if we can find entry in those two rather than looking into NASDAQ if NASDAQ no longer correlates with the direction we want it to go. Okay. So that sums it up. Do you have more questions in regards to that?
I do not.
Beautiful. Okay, so I know we're gonna have some new people right here with us, and there might be some old people. So I'm gonna I'm just gonna do a little bit of walkthrough through the strategies that we have. We have 3 tools, and one is seasonality, and one is COT, and one is probability. And basically what this 3 tool does is basically one shows us the long-term move of the price, one shows us what the banks and the commercials are doing, and one shows us what percentage we have on winning when we're going in on that specific date. Now, seasonality works this way. It works as a seasonal tool. Every single thing on the planet have a cycle. There's a cycle through the planet, in buying and in selling. Same thing applies to commodity and stocks and the financial market. So what we do is we try to understand the cycle. Is it the right time to buy a specific asset? Is that time the asset is going to go bullish, or is the market going to go bearish based on the cycle? So it's just like when you have Christmas, the price of turkey, chicken, and all of that stuff goes up. And after Christmas, it goes down during the Islamic period, the Salah period, price of cows and cattle go up. After the period, it goes down. Same thing happens in the market. So what we do is we try to piggyback off those moves and that we can see the season and ideally make right call in the trade and make a lot of money, right? So this isn't the conventional way of trading, which is the support and resistance and technical tools and all of that, but this is more fundamental based type of trading, and it gives you a lot more time when you trade, so you have more time to do whatever else you want to do in your normal day-to-day life. So off the bat, does anyone have any asset they want me to look into today? Also, I don't want to go around doing all the full analysis like I normally do. So just to give a little bit more time for questions, and because I know a lot of people that are just joining do not understand the tool and don't understand how it goes. So I want to spend more time speaking to people about the tools and telling them and showing them exactly what it can do. So if you have a question, okay, cool. We're getting that in. We go Euro GBP, we go GBP USD, then we go S&P 500. Okay, cool. All right. So the first thing we can do is if you can also send the message publicly, it will be great. Great. So everybody can see exactly what assets you want me to look into. So Euro GBP, GBP USD, S&P 500. So first of all, we're gonna go with Euro GBP, and okay, what we do is we look at the COT report. Now, as I said before, we have three different tools: the COT report, seasonality, and probability. But in the order that I look at them in is I go with COT report first, right? So the first thing I do is COT report. Now, COT report makes me see what the big banks are doing, what the commercials are doing, and basically what happens here is the COT report lets us know if an asset is worth trading or it's not worth trading at the moment. All right, so we go for Euro first, and then we'll go for GBP next, right? So when it comes to Euro, is it right here? I'm using a smaller screen, so my response time will be slightly different because I'm using the laptop directly rather than connected to the screen. So bear with me if I'm responding a little bit slower. It's a lot more brighter. Let me turn that down. So pounds. Now, for the guys that haven't seen this before, don't get freaked out. This is not it's not something that is very, very complicated. All we focus on is we focus on the commercial aspect. When it says commercial right here, we focus on commercial, then we focus on changes. Those are the two things we focus on: commercials and changes. And what you want to look at is, are they going long or are they going short? Long means buy, short means sell. So short, as we can see, GBP, they're going short. They put 13,000 new positions and they've taken out 6,000 positions from their long side, right? So what we're going to do in that case is we say GBP long. Now, also, I know a lot of people are not used to trading like this. A lot of people are they're very used to just going to the chart, looking at the chart and start drawing out. We don't do that. What we do is try to get
we're going long for this one?
What, which one?
For GBP?
No. Oh, wait, hold on. No, my bad. I wrote long. Thank you very much for pointing that out. Short.
Yes,
My bad. Mine's all displaced. All right. So thanks for that, Cortland. So we go short on GBP because they're adding 13,000 new positions to that, and then they're taking positions away from their long. Now, this is all you focus on. As you get more advanced into the tool, you can then look at the non-commercials and see what they're doing. You want them to ideally be doing the opposite, right? Because we need liquidity in the market. We need to take money from some people, right? That's how the market works. You take from people, literally, and they take from you. That's how it works. So if these guys are going long, it assures us that there's going to be enough money to be taken off them. So they're going short on GBP. Then on Euro, let's see what Euro is saying. Euro, they're also going short. Now, they're a bit confused right here because they're putting 5,000 position to the long side, but 21,000 to the short side. I will stick to the short side because the short side is bigger. Now, if they have the same amount of position pointing in the same different direction, what I tend to do is I tend to watch how the asset plays out. But for now, because we have 21,000 position pointing short and we have 5,000 position pointing long, we go Euro short as well. But I like to just put a stop beside it because the people that are going long also see something there. I like them to be more uniform. So we go short. Right. So that being said, we have our consensus on Euro GBP. Now, I don't really need to do much after this than to check my seasonality. Now, for the guys that get confused with the COT report, that, you know, first time seeing it or you've seen it before and you still don't understand it, what you just need to label is just what I've done here. GBP, Euro, short, short. That's all you need. And then the next thing you do, you come to your seasonality and open your GBP chart. And then you also open your Euro chart. All right. And basically what we want to look at here is what season are we in the Euro and what season are we in the GBP. Yeah. So not used to small screen. Okay, so we are at the 13th right now, right here. So we're right here at this position. Now we can see GBP is actually meant to fall, right? So if we look at it, we're right here. According to the 5 years and the 15 years, yeah, 5 and 15 years, GBP is meant to fall. But the 45 years telling us that we are much safer to go in on the 16th to sell GBP on the 16th. Now, let me isolate that so you can see exactly what I'm talking about. So from the 12th right here, we're meant to see GBP start falling according to the previous 5 years from 2021 backwards. And the 15 years also gives us around that period. It gives us actually on the 13th, which is today. Now, keep in mind, yesterday was Saturday, today is Sunday, so we kind of neglect those 2 days, and we go for the times that we can see a more uniform alignment. Now, if we include our 45 years, the best time for us to start looking to sell would be somewhere around here on the 16th. Now, we know from the seasonality, GBP goes short from the 16th, right? And that move might last until, let's see. Now, we might have a pullback right here, but ideally the move should last up until the 10th, right, of March, right? So now I know quite a few people might not like to hold trade for that long, which is okay, and it's fine. You know, you don't have to hold your trade all the way through to this, you know, to the end of March. But what you can do is you can take some profit as you go along. So just like when we had this, the AUD JPY, where is that asset? AUD JPY. Look, this was the analysis we had last week, I think. And price went all the way up. I took profit right here, and I did announce that in the what's it called, in the Telegram, and then waited for it to pull back. And then from the pullback, I can actually go back in now and then go long. But I haven't done analysis for that, so I can quickly go run through that one more time and run an analysis on that, and probably we can actually still take this trade going long. So what we've done there is now is we've seen GBP going long at that period. What I also like to check normally is I would check, I wouldn't really bother checking Euro, but because Euro also has a COT report pointing short, at the same time, I have to be very careful because both assets are pointing short. So I want to be sure which one should I go for. So we at this time right now. So if let me just get that zoomed in. So currently the date is 13th, right? So we here. Euro is also meant to lose strength from the 13th and lose strength up until the 2nd. So up until the 2nd. So what that tells me is if Euro is going short and GBP is going short, I wouldn't want to trade them against each other. But I can look for an asset that's going to go long and trade that against these two pairs, okay? Guys won't have too much time to analyze this. Oh, child trafficking on Australia. Yeah, that might actually influence the market. It might drop the price a little bit, you know, but I'm not sure. I haven't been I haven't seen that type of move yet in the market. I know during election affects, but now I'm not totally sure yet, Colin. So what we have now is we have euro going short, we have GBP going short. The ideal thing for us to do is to look for an asset that goes long on the COT and then also have a long seasonality, or it doesn't necessarily need to have a long seasonality, but have a long COT report, and we can look at the probability of that asset and trade them against each other. Okay, so I'm just going to quickly scrape through and look at, maybe we can find an asset that has a long. All right. Just pretty quickly. All right. So we have JPY going short as well. We could check euro. Let's see USD. Okay, we have USD.
Let's check CHF and CAD. CHF and CAD.
Okay, let me run through this ones that we have now, and then if we have a little bit, I doubt we're gonna have a little bit more time because I have another meeting immediately after this, so I won't be able to restart, but I will be quick as possible. I want to take it slow so everybody understands what I'm doing, but if I can, I would post that in our Telegram. Right, so USD is going long, right? So we good for USD going long. Let's see what's the report. USD going long. So what we do is we check the USD seasonality also, just to make sure that it's pointing in the direction that I want it to go. And if we have that, we might have a USD against euro and also against GBP. So we're right. We're right about here. So we don't really have one clear shot, but we have on the 16th, right? On the 16th, USD seems to be going long on the 16th, and 16th should be Wednesday. So if we put right there, USD 16th. So Feb, and how long would that last for? That will last until the 9th of March, or yeah, 8th or 9th of March. Let's say 9th of March too. So what we can do now is we can quickly go and check probability. We don't have much time anymore. So apologies, I did start late, so I do have to apologize for that. What am I doing? GBP USD, right? So what I can do is check GBP USD. I can also check Euro USD and check both assets and see what we have. So on the 16th of February, right? So on the 16th of February, because we're expecting GBP to go short, we want to see a short move coming from the 16th. And what I normally do is I like it to be 3 days back to back, but right now we have short on that day, then long, then short. Ideally, I won't take this trade because it doesn't meet the 3 days requirement, but that doesn't mean it's not going to fall on that day, right? So let's check Euro GBP, Euro USD, my bad. Euro USD gives us, they're short on the 14th and the 15th, but long on the 16th. So it doesn't really give us exactly what we want. Now, because of time's sake, I won't be able to look at more assets in depth. But what we can do is I can look at the probability of, let's check Euro GBP probability, and then we'll see what we have here on Euro GBP. I think someone wanted us to check that anyway, so, and compare what we have. So from the probability, we can see Euro goes down 3 days in a row, then kicks back here, and then kick here. Now, this 3 days in a row, Euro is going to lose strength there. And we also know that Euro loses strength, here, and also loses strength from here. So Euro GBP, we can actually trade this short. Now, keep in mind, because this doesn't align the way I want it to be, this would be a very high risk trade. And even if you're looking at euro is already falling. So it's already done its fall, some of the fall already. So what I would normally recommend is you wait for price to pull back. So pull back somewhere around here. What's that? So wait for price to pull back somewhere around here. See where the support and resistant region is. If price pulls back around here, you can sell that and exit on Wednesday. So quickly selling, hopefully price gaps to the upside, does a quick raid, then sell that up until Wednesday. But keep in mind, this is a super high risk trade because it doesn't fully align. Now, a lot of people might be confused by what's going on right now, and I understand it's slightly confusing. I do wish I have more time to explain, but I can't. So what we will have to do in this instant is to go on Clubhouse, probably sometimes on Wednesday, or maybe sometime on Monday or Tuesday, and discuss about this, and I can do a quick run again one more time on this asset. Today is quite a juggle for me because I had technical issues at the start, and also I have a meeting immediately after this. But what we can do is we have 3 assets that we can look at. Now you can compare, you can, if you have access to the website, you can go and look for, any asset that's gonna gain strength and trade that against the GBP or against the euro at this set dates. Or you look at USD going long, and any asset that's gonna go short, trade them against that. So far they align with the probability. The probability has to align. Okay. And basically, if they align, you can take that trade and then use that to make some money this week. I do apologize that I can't pull out or trade for you guys right now. I really do not want to pull out a trade and then put your capital at jeopardy because of I don't have time to fully analyze. So what I'm going to do is, for the people that have access to the website, please log in and check the ones that are going long and compare them against the ones that are going short, and then check the probability for the alignment. Once you find that alignment, feel free to trade that trade. You're safe on euro, you're safe on GBP, you're safe on USD. Just find that alignment on the probability and you're good to go, guys. So if you have questions about this, can you please send it to me on Telegram? I would answer that the moment I finish the meeting I have after this, and then we'll take it from there, okay? All right, guys, I really do appreciate you guys for joining. And for the guys that are very new here, I understand this is not, it can be a lot of information. It's not something you're very used to. You're used to drawing support and resistance and trend lines and maybe Fibonacci and all of that, but this is not the way we trade. We trade more subtly. So thank you guys for attending, and then I'll catch you guys on the Telegram group and we'll talk more on Clubhouse. Okay. Thank you, and I'll see you soon.
Thank you, Dan.
All right, take care of yourself, Colin. Take care of yourself, everyone else. All right, bye.
Thank you, sir.
You're good. Thank you very much.
Thank